Okay, I think we're live, and I have a really noisy laptop over here, so I hope it's not causing an audio issue. I don't know why it's being so noisy. The fan just went bzzz. Hey, thank you so much for joining our webinar today, our presentation. Today's presenter is Ed Downs, and he'll be talking about finding profitable and predictable patterns in your charts using artificial intelligence, and it's going to be an awesome presentation. Ed is always very interesting to listen to. He's always very sciencey, and he really gets down to the nuts and bolts of it, and I know you're going to enjoy it. My name is Greg Lewis. I'm the marketing director here at MetaStock, and you are coming, or I should say I'm coming to you now from my basement, our temporary MetaStock studio. Of course, we've been doing that for some time now because of the world situation. A few quick things to talk about as you're coming on. Make sure you say hello. I see Norm Henderson from Vancouver has joined us. Thank you, Norm. Anybody else? I see there's quite a few people here, so go ahead and say hello. Let me click on this real quick. Go ahead and say hello when you come on. A couple quick things. We are MetaStock. Hey, have you seen my shirt? We're going to start here in 3 minutes, by the way. Have you seen my shirt? See, it says 5. It says MetaStock Trade Strong. Yeah, I designed that. That's because when our company was 5 years old, 2 years ago, we made these shirts. It has that, and it has all of our names on it, and it's pretty cool. And I tell you that to tell you this. Small history about MetaStock. We've been around forever. We started about 27 years ago, and then we were purchased by Reuters, and then Thomson Reuters, and then about 7 years ago, divested. We separated and started ourselves as our own company, and that's where we are now. And we're a strong, lean, mean company, and we're very proud of that. So another couple things I want to tell you. We got 2 minutes. Tomorrow is our market recap with Tim Oh, you know what? I think I spelled that wrong. I believe it's Tim Stryton. My apologies, Tim. Anyway, our MetaStock market recap is tomorrow at 4:30 Eastern. If you want to join us, all you have to do is come back here, and we'll be waiting for you. Or you could go to youtube.com right now, which actually is where you are right now. And click the little bell, and you'll be reminded about that. Another thing coming up I'd like to tell you about, the APAC Traders Summit. That is coming up a week from Friday. In order to register for that, just go to metastock.com and click the banner up at top, and it's going to be 6 speakers for 6 hours, and it's a marathon event, and it's going to be awesome. Okay, I see we have about 1 more minute. No one else is saying hello. Just give us a shout out. Say hello. Say how you're doing. Anyway, I'm going to go ahead and mute myself. We got about 1 minute. I just want to make sure that Ed and Jeffrey are good to go. See you just in a minute.
Yes. All right.
Now,
We're waiting for the go ahead.
Jeffrey? Jeffrey?
Yes, Ed.
Just make sure you start the recording, right?
Yeah, no, it started. Yeah, the broadcast has now started. I don't know. You're acting like maybe I've forgotten to start the broadcast a couple times. I don't know. I don't know where this doubt is coming from.
No, I'm just being, checking.
I want to welcome all of you guys out. How are we doing? My name is Jeff Gibby. I'm going to read a legal disclaimer, turn the time over to Mr. Ed Downs here. He's going to talk a little bit about the chart pattern engine. Let me go ahead and get straight to the legal disclaimer. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So you guys can see Ed. I'm going to go ahead and start turning the time over to him while I talk to you a little bit about Ed and who he is. So if you're new, I haven't seen Ed speak with us before, I want to let you know just a few things about him. He's been working with MetaStock for decades now. He does a really, really good job. One of the things that I'm very, very impressed with him is the thoroughness he has and his team has. Very, very smart people. The product he's going to show you today is a chart pattern engine product. It does a really, really good job about looking at chart patterns. It's been extremely popular. And but about Ed, he's very, very good. He does a really good job. He's very thorough in what he does. And he's quite a bit, well, he's a very smart guy. So Ed, I was going to say you're quite a bit smarter than you look, and then I kind of backed out of it.
That's cool.
Anyway, how are you doing today?
I'm doing great. I so look forward to these sessions with you. It's always fun. So thanks for having me on again.
Absolutely. I'm gonna go ahead and let you go, and
okay.
I'll be here if you need me. If we have questions that come in through YouTube, I might chime in to let you know about them.
Okay. Well, if you think something I'm missing, let me know. Just interrupt me. We'll do that too. That's good. Okay. Well, thank you, Jeffrey. Like Jeff says, I've been working with MetaStock and the company for let's see, about 3 decades, a long time ago. Just a really quick, 30-second version of that. Back in I started my software company back in '87, and really focused on automation. I'm an automation design engineer by trade. Which has to do with automating chip design and things like that. And really fell in love with trading and wanted to apply the same kind of principles to trading. So I started doing that. And early in the game, we made some automation utilities that worked in DOS. Everybody's forgotten what DOS is, and back in the day, back around 1991, when MetaStock was out, it had been out a little while. And I hooked up with Steve Akalis, the original founder, and said, hey, we've got some utilities that I think your customers might like that automate MetaStock. And he was just a great guy. Actually went to Salt Lake City, met him, and we started, sort of cooperating on our products and selling each other's products. And it was just a lot of fun. Of course, then DOS went away, so that was one chapter that was closed on that. But we continued to work with MetaStock, selling their products, and just a great team over there. Came back to them. I guess about a year ago, because one of the things I had done in the pursuit of automation of the trading problem is to create this AI module that we've been working on for a very long time. And I approached Jeff and I said, hey, do you think your customers might like this? And so we got together again, and so they have our Fulgent AI package for available over there in the catalog. And a little bit later than that, he knew that I had done some work with chart patterns. And he said, hey, do you think you could come up with a chart pattern module? And I said, well, heck yeah, let's do it. So we took our technology and packaged it in the Fulgent AI engine, which runs in the background. You're going to see that in a minute, but providing that for MetaStock users. It's been great. Talked to a lot of people over there and customers, and of course the great staff at MetaStock. They've always been just fabulous. And so it's been fun. But this particular product is dear to my heart. I've been working on chart patterns for a very, very long time. And so this is kind of a late addition, recent addition, but many versions after the first one of the chart pattern engine that we built here. And I'm really pretty proud of it. But today, I don't, it's always, I know a lot of these presentations that all of us do, we have something that we've built and we're selling that, whatever that is. It could be education or whatever it is. And we appreciate the partnership we have with MetaStock to be able to do that. But my real intention today is sort of twofold. I am going to show you the product, but I also want to teach you something about chart patterns because I've been, like I say, working on them for many, many years. I understand a lot about them from that experience. And so if I can make you a better trader, regardless of whether you get the chart pattern engine or not, I want to do that. I want you to come away from this webinar really feeling empowered about certain things about chart patterns that will help you. And so let's go with that focus and agenda. And hopefully I can do that for you. All right, so first off, I am going to be going over a lot of material about patterns. There are 7 major patterns we're going to cover, and there are nuances about them that you probably want to, sort of learn and tuck away somewhere. So I have this book that I wrote. It's free, of course. If you go to that website, fulgent.ai/MetaStock, and then go in the upper right corner there and click that little icon for the book, and put your email in. We'll get you the link to it, and it's not real short. It's got a lot of examples in it, but that will really help you understand the material that I'm going over today, and sort of in the book form. So I want to encourage you to do that, and I'll show you the link again at the end. But it's just fulgent.ai/MetaStock. All right. So with that groundwork laid, and again, thank you, Jeffrey. Let's go and dive right in here and talk about patterns themselves. I know if you're trading, you're using patterns. Well, anyone's using patterns that's looking at the market, because that's what we perceive as the psychology of the market. And the really interesting thing about a chart pattern is that it is a reflection of what the market thinks about that security, but it also determines the behavior of the market. Because as you know, you have something like a support level formed. It becomes very obvious that there's support there. When you break the level, people go, oh dear, we're breaking support, and they start selling. So it does both things. It tells you what people are thinking about the market, and also can cause things to happen, which is really pretty cool that they do that. There's been a lot of debate over the years about whether this stuff even works at all for trading. And there was a very famous study that was done by McKinley and Lowe at MIT, where they, back in 2000, they decided to prove that chart patterns actually work or they don't work. And so they did a lot of examples. Again, this is a very famous study, and they looked at head and shoulders, triangles, and things like that, and really studied the data, like what happened after these patterns formed. And what they determined was that the various technical patterns occurred far more frequently than if they were just random. And so, and we know this. I mean, we know they're highly predictive. And of course, they came up with the conclusion that they are useful for determining future chart prices. Okay, so really awesome stuff. But that wasn't common knowledge back in the day. Back then, it was like, well, it's kind of voodoo stuff. I've even heard professors in college say that. Not true. This is how the market works. So we're right in the middle of what we need to know. And in fact, if you look at this chart, which I have hand marked on the index, it's the SP 500. These are all kinds of consolidations, trend lines, volume patterns. We're going to be talking about a lot of these today. But you can just see from the arrows and how they form, they're highly, highly predictive, especially when something like a support level is broken, or consolidation forms really well, and the chart takes off after that. You can just see all through this chart, there's just so many examples of moves that happened after the patterns formed that it's just obviously a really, really great thing to look at. So let's go ahead and transition now and start talking about these actual patterns. And there are 7 of them that we're going to be getting into today. And I actually wrote a little book back in, I think it was 1998, a long time ago, that was written about these patterns, called The 7 Chart Patterns That Consistently Make Money. And it is available at Trader's Library, but if you download that free book, it's basically the same information. So, just get the free book, you're good. But in all this time, since 1998, the state of the art and the way patterns work really has not changed that much. They're still operable because they are just market psychology, right? So we're going to look at 7 different patterns here. Trend line, support and resistance, consolidations, volume, climax, and trend, Fibonacci retracements, price gaps, and saucers. And those little words to the right of the names are the acronyms that we use in the chart to show what those are. And for trend lines, you have both the breaks and the reversals, and the same for support and resistance, both the support resistance breaks, SRBs, and support resistance reversals, SRRs. Now, there are other patterns out there. There's lots of them. There's scallops. There's all these things. But all of those other patterns, in my opinion, including double tops and bottoms, are just variations of these 7, right? Because a double top is really a resistance level that's being pushed against. And a cup and handle is really a consolidation, or I'm sorry, a saucer followed by a consolidation. So you can derive other patterns, but these 7 are the core, and those are the ones we're going to be really looking at. Okay, so let's dive right in here, and let's talk about the first one, which is trend line breaks and reversals. Great pattern to trade. And what I'm going to say about all of these is what you're always looking for, always, is does the market see it? Is it obvious to the market that there is a pattern there? There is a sloped support or resistance line. You just have to ask yourself that. And when there is, and it gets broken, the market will react to it. So it's an invisible line that's forming across these pivot points in the chart. And when you get a very, very strong break of a trend line, you can have just an explosive move. So you want to watch for that. You're looking for gap through the trend line, volume through the trend line, and those things are really, really powerful. Now, normally, what I would do here in a normal presentation, I say normal, standard, classical, teaching presentation, is I would start coming behind this with all kinds of chart examples, right? Like one after another after another. Well, those are in the book. So we're not going to do that. Instead, I'm going to use our software to sort of show you these things one at a time. And I think that's really the best way to do it. And it kind of dovetails with just showing you what the thing does anyway. So let's just do that. This is a chart of Apple, and I've got it up here, just pull it up. What I'm going to do is activate the Fulgent chart pattern engine, and we'll turn on the commentary. I already have the expert applied to the chart. And now I'm going to go over to the engine because I want it to display this first pattern for me. So let's go to Fulgent AI, which is in the menu of MetaStock. It's really great. And I got to give William Golson over there at MetaStock kudos for helping us figure out how to do this stuff. But anyway, it's really awesome. It's right there. Here is the actual interface to it. And there's lots of Fulgent stuff in here. The FT patterns is the one we're going to be looking at today. The other things are AI systems in the Fulgent engine. So let's go into FT patterns here. And this is the pattern interface. And there's lots of patterns. Of course, there's more than 7 in here, but we're going to look at these 7. So this first one up here, I'm going to activate trend line breaks and trend line reversals. I'm going to turn those on, click OK, and say refresh. All right, there we go. And so you can see the TLBs and the TLRs showing up in here. And so we're going to talk now about these patterns and kind of, when you're looking at them in the market, how you want to look at trading them. Let's go ahead and zoom in just a smidge here. That's a very important technical term, by the way. And look at this trend line break right here. There's actually a couple of them. So what the chart did, and I can actually get a MetaStock line here. Just kind of draw it. There we go. There's your trend line. And so what the program is doing is it's picking up on the fact that we have broken that line. And what we do in Fulgent, because we can't really draw in the chart, you can't do that in this version. I know they're working on this, by the way, a feature for a coming version, where people like us can do that. But what we do instead, and again, the folks over there showed us how to do this, was we just shade the chart where the pattern was formed. So it's formed across all of these bars, and that forms your trend line break to the upside. There's nothing over here to the downside, but there it is. So what you're asking yourself, looking at this, whether you're drawing them by hand or using a tool like this, is, okay, you got a trend line break. Is it a significant trend line? Is it really important? Or are other things happening around that trend line? So knowing that you've got a break there, I mean, that's pretty darn bullish. Came through, really getting strong right here. Look at the volume climax pattern, which we're going to talk about in a minute, happening right there. You got a couple of gaps going up. So lots of things are happening right in this area to tell you that break is indeed important. So go ahead and zoom out a little bit more here. We'll just kind of look at some more. Here's, if I go to the right, same thing. Okay. Here is long trend line. I could draw another one here. Let's do it. It's kind of fun. There's one right there. It goes all the way down. There's the first little break is right there. It sees it. And it goes, okay, hang on a second. Let's grab it. Maybe I don't need quite so large a cursor. I can make that a little bit smaller, but anyway. So we broke the line right there. The program sees it, but it's not a definitive break, really. It's just kind of a weenie little break. So you go, well, I don't know if I'll trade that one, and that's what this whole thing, when you're looking at any of this stuff that we have, the chart pattern engine, it's trying to show these things to you as early as possible so you can look at the chart and you can determine if it is significant. That's the whole philosophy behind it, rather than it trying to determine that, although there is a strength setting that we're going to explore where you can say, just show me the really good ones. I'll show you that in a minute. But generally speaking, you want to see all of them. And so I see it, I don't trade it. I wait till I get the good break. This is the good break right here. Anything in here is good, where it's breaking through, going up. That gap right there is awesome on volume after the trend line break. So once I've been alerted to it, or I see it, if I'm just using MetaStock, day to day, and I draw these lines on here, which you should do, and then you come back to the chart and say, yeah, it's doing the thing. I mean, the market sees that. There's a really nice example over here of a trend line break right there that's occurring across all of these bars. Again, same thing. You got a gap, you got some volume. So spent a little more time on trend lines probably than the other patterns, but just trying to give you the idea that all of these things, all of these signals are actually very, very good. You can see how accurate they are. This one was not really. That trend line is kind of a shallow trend line going across there, and so I'm sorry, it's across here, these bars, but it's just a little teeny break. I'm not going to trade that one. It's just not. You look at that and you go, is the market really seeing like a support level being broken kind of a thing? No. Program does see the break, but that's how you qualify to trade these really good ones. Okay, so that's trend line break and reversal. The reversals happen off of, let's see, we got one over here where you've got a trend line formed, across lows going like this, and it sees a bounce off that trend line. That's your reversal pattern. So they're not as powerful as the breaks. The breaks are really good. The reversals are good, though. If it's well formed, they're fine to trade. Okay, so that's trend line break and reversal. Now let's go on to the next one, which is support and resistance break and reversal. Almost the same thing, except that they're flat. They're flat trend lines. Or you could say that trend lines are sloped resistance, support, either way. But let's go ahead and go back into Fulgent here, and I've got it down on my taskbar, and I'm going to go back in, and we're going to turn off these guys. You're probably wondering why I'm doing that. I want to isolate the patterns that we are looking at the moment. So we'll do the Big Bang thing in a minute, but there's support, resistance, breaks, and reversals right there. Click OK. Let's refresh the chart, see what we got. And here we go. Okay, so go back this way a little bit. Support, resistance, breaks are really, really powerful. You can see back here, I mean, anytime you go through recent highs or lows, it's a pretty powerful thing, and usually will result in a move about 70% of the time. And so you can see a break here of that little point right there. Here's a reversal. Reversals are not as powerful as breaks. So it sees this resistance level. The chart starts to go down. It goes, okay, you got a reversal here off that level. But, we're in an uptrend. We go, well, we're going to make sure that is really a downward move before we trade it. And so you wait. Then over here, we've got a very nice, look at this, chart's going down, dropping like a rock. I get a break right there. There's that support line right through here. And actually, I could take this little trend line and just kind of move it over to show that really quick. I say quick because my fingers don't do what they're supposed to. Yeah, so we'll pull this down and just kind of do it right there. That's where it's breaking it right there. Another one here. Okay, so these are good moves. Here's the support, resistance break to the upside, very strong. We came up, we consolidated, it's moving up, has a gap. That's very, very nice. So that's your basic support resistance break. And again, the break reversal, the breaks are the powerful patterns in both cases, trend lines and support resistance. Let's see if we got another over here of note. Here's a break that took a little bit of movement there, but then it kept going. This is a support resistance reversal off of that support level. It did move up several bars, but you know, I wouldn't really write home about that one. You know, but you do need to make sure that, as I say, that the market sees it. And that wasn't bad for a short-term trade right there. This one is coming off of that resistance, gets a little down movement, says, okay, you gotta move off some kind of a resistance pattern, but not much. It wasn't a big one. So you know, I wouldn't trade that. I want to see for a reversal that's dropping, I want to see some stuff coming into that, some volume gapping. But again, the program will just point out where it sees the movement that you want to then look at. So that's the whole idea of it. Okay. We've covered now 2 of the patterns. Let's keep going. You can tell I'm talking pretty fast because it's a lot to cover, but the book will help you, like I say, with the structure of these things. Saucers are great patterns, especially the short-term ones. These are kind of more longer-term saucers that they form like this. They'll usually get up to about halfway of the prior move, is why that 50% is there. And so, you know, you turn it up and then you're going to go up to here probably. So you have both saucers and a rounded top, which is the short version of a saucer. They're also very, very powerful, as you are going to see. Very reliable indicator. All right, so let's see if I can back that up here. Let's go in there and look at it. And by the way, I'm staying on Apple because everybody knows Apple. And if I was jumping around charts right now, we would never get done in the hour that I have. It wouldn't even happen. So we're going to stay on Apple, and then we'll do some charts at the end. Okay, so let me go back into Fulgent. And all right, Fulgent, need some more help here. Give me some saucers. So I'll turn those guys off. Turn on the saucers. Sounds like a song, doesn't it? Turn on the saucers. Okay, here we go. And you can just see right away that these things are really, really good. I mean, whenever you have a smooth curvature in a chart and the saucer forms, that's just a great place to look for a continuation move. And what you're looking for is a break of these highs right here going across. And then there you go. So here's another one formed here, a little one here. Got some downward saucer there. It didn't go very far on that one, downward here. And generally, bullish patterns are pretty much going to work better than bearish patterns because the market is predisposed to go up. So nice, beautiful. That is a beautiful saucer right there. Look, you got a gap after it. We've got a volume climax pattern happening right there. I mean, that was just good as gold, that guy. But the other ones are good too. You know, this is a nice little short-term move here. Actually, pretty long-term. Went down quite a ways there on Apple. It's hard to believe Apple could even go down, but there it did right there. So that's a saucer pattern. It's a rounded formation that leads to, you know, a move because the market sees that slow change from here to here. It just sees it, and people will buy into that. They buy the stock anyway just because of fundamentals or something else or news, but that pattern is just dynamite to pick up on, and so you know you want to know where they are, and again that's what this software is trying to do, is find them. Okay, so back to presentation here. And we'll look at the next one. These are great too. Fibonacci retracements are really predictive patterns, and nobody really knows why they work. I mean, we don't, you know, Fibonacci numbers are all over the place in nature. These ratios just pop up all the time. The fact that when you go up to a certain point and you pull back halfway, 50%, it's a very powerful psychological reversal point. Something about people's brains, just like that right where that is. 38% is another one. You came down to here, up 38%, bounce off it. There you go. And then 62%. So down, up 62% of that move. And then there's your reversal point. So these are a little hard to call. You do want to see the chart move away from that point to confirm it. You know, so we'll get some examples of that here. So good. Fulgent, back into patterns, and all right, bye-bye saucers. Hello, Fibonacci's. There we go, right there. Oh, didn't quite get it. Okay, and we will refresh and look at some of these. Okay, I want to go back in time here. We'll look at a few. So let's look at what these are. Here is a 50% job, and it was a good reversion point, came up like this. This is a 62%. So 62% of this move right here. And you can see very, very predictive. These are a little more rare. Now here is a 50% on this move. Chart starts to turn around, and the software goes, okay, you got a little bit of a movement the other way at that point, and I don't know, that just isn't any follow through on that. This one, on the other hand, is 50% of this move right here. That's what the shading tells me, and it just took off. There's a gap. Ooh la la, you're off to the races. So that's what you're looking for, is that kind of thing in these charts. Okay, and I'm tempted to go look at more charts right now, but I'm going to resist the temptation so we can just get through these patterns and I can show them all to you and talk about them before we do that. Okay, so Fibonacci retracement, and we've got 3 more. So the next one is price gaps. Also very important patterns, very, very important. And again, as with all of these, you want to look at the gap and say, okay, first off, does this chart have like 1 million gaps in it? It doesn't matter much. If that's the only gap you see in that chart, it's probably real significant. So that's important. And there's 3 different kinds. The breakaway gap, which occurs at reversal points, the measure gap that occurs in the middle of moves, and the exhaustion gap that occurs at the end of moves. And I really like the breakaway gaps and the measure gaps. The measure gaps, this is the first pattern we've talked about that is a continuation pattern. That's what we call it, because it indicates that the chart's going to keep going. And the interesting thing about this is that when you have a measured gap, the chart will almost always travel twice the distance. So it came from here to here, it breaks out, keeps going, it's got to keep going, I'll tell you why in a second, and it keeps going, you go, okay, we're going to go up to here. And it's very predictable. It's weird, but it just is. The reason you got to wait for it to move is because you don't know beforehand if that gap is going to become an exhaustion gap, because the chart could just turn right around right there and go through it. So you need to get a little momentum, a little volume coming into it to say, yeah, that really does look like a measured gap. And then you put your stop like right at the gap. So if it does turn around on you, you're out. Okay, let's go ahead and go over to Fulgent and have it help us again. This is my little helper. Let's turn on the, let's see, the gaps are there. And refresh that. Doop. Okay, and it's finding quite a few in here. Let's go back a little ways. And you can see, so I'm going along here and I get a breakaway gap right there because it wasn't a continuation. However, if I look here, look at this one. You dropped, there's a kind of a breakaway gap. It comes down, it goes boom. It comes up, touches it, and starts going down again. Oh my goodness. That is a measured gap if I've ever seen one. And sure enough, the chart goes twice the distance of this. Pretty close, right down to there, almost exactly. Here's an exhaustion gap, a breakaway gap, and these gaps are really awesome, how predictive they are. There's a breakaway, breakaway gap right there. Here is an exhaustion gap. Chart turns into the gap. And you can just see those. Here's breakaway, breakaway. So it is, and look at these downward ones. Oh yeah, upward. Oh yeah, that's what we want right there. Now this little guy was kind of a weenie gap, just a little bitty one, and it was at the top of a move, consolidation there. It just isn't, you know, the market looking at that going, what are you talking about? What is that? So the software is going to see it and tell you about it as many times as it can, unless you restrict them to the better patterns. I'm going to show you that feature that this thing has in a minute, but you can do that. But it's very easy to look at. Look at this one. I mean, it's very easy to look and say, oh yeah, there's some accumulation going on there. And of course, that just happened like, what, this week. So and I'll show you some real-time charts in a minute that are really pretty cool about this. Okay, so checking my watch here, how we're doing. Okay, we're doing pretty good, actually. We only got 2 more to cover in terms of the educational part of this. I really like this pattern because when they are extremely well formed, they are just deadly in a good way. And what it is you've got a move happening and you got volume coming into that move. The chart peaks out and it turns around. and the volume turns around at the same time. And when these are really, really obvious, like this over here, oh my goodness, they are just to die for. Sorry, all those analogies are probably too much, but they get me excited because the chart will really, really move a lot. Now that's a volume climax because the chart climaxes in one direction or the other. A volume trend is where you have the same thing happen, but instead of the chart going the other way, it keeps going. And that is, my friends, a measured move pattern. When that happens, you're probably halfway of the move. So you go down, this thing forms, but the chart keeps going. You go, oh my goodness, let's see, let's just measure it twice the distance down to here. That's where it's probably going, like 80% of the time. Same thing here. You got up to there, the volume backs off, and the chart keeps going. Oh yeah, we're going. And the reason it happens, this is actually pretty easy to understand, is that you have buyers and sellers at any point in the market. The only reason price moves is because there's fewer of one or the other, or more of one or the other. And so they're transacting, and there's a certain number of people that want to transact around that price. Once they have done that, and the volume decreases because they've stopped buying and selling with each other, the volume goes down. It takes very little pressure to move that chart. It's like it's all gone. They've already done their thing. The chart keeps going or it reverses, and it just takes nothing to do that. So that's why it's so powerful. Okay, let's look at a few of those critters here. So we've got turn when Fulgent, turn off the gaps and pump up the volume. Here we go, volume climax. Okay, there it is. Close it. And let's refresh the chart and see what we got here. Yeah, okay, we've got several. Yeah, now this one, this particular pattern is really sensitive, and so a lot of these, like this one here, it is a volume climax pattern. The chart turns around a little bit, but it really should be labeled a volume trend, and the arrow should be the other way, maybe a bar after it. So it's got the volume. You see the volume coming up here and then backing off right there, but it starts going down. So that's okay. Just because there's a green arrow there, I know I have the volume event. I can just look at that chart and say, yeah, it's not going up. It's going down. And that's halfway from here to here to here. Pretty easy. And the same thing goes for these other examples. Here is a nice correct direction volume climax pattern. Look at all that volume. Of course, this was the COVID crash. Look at all that volume right there coming in, and then it backs off right there. The chart moves, a little bit of a hickey, but then it continues. So that's a really good volume climax pattern. Okay. So, and I'm tempted to try on the strength rating here so you can see what that does, but we'll hold off on that. Let's go and I'm going to contradict myself here and go to the next stock so we can see some more examples. Here's a volume climax, looks really pretty good. It's another one. Here's, didn't move very far. There's another one there, another one there. So looking for a really good example. This is pretty good. So we dropped precipitously, volume came up, volume backed off, the chart started going up. Oh yeah. So then this one, chart went up, lots of volume right there, backs off, the chart goes the other way, so it's going down. This one, the chart goes down, lots of volume coming into that valley, and then it goes the other way. This one, you can see it. I mean, and look at this one here. So volume's coming in, see right there, all this volume, and the chart backs off, and that's it. Okay, let's go back to Apple, and we'll do, I think there is one more. Yes. Okay. So we'll do that, and that is, which one is it? It is, oh yeah, these are great. Consolidations. So we're all very aware of these. It's a battle between buyers and sellers, starts going back and forth like this between two lines, and they can be like this, or like this, or like this, or like this. It doesn't really matter what the shape is. It's a between buyers and sellers back and forth. The resolution of that is going to often, most of the time, about 80%, 78%, create a move. Because once it resolves, then, okay, it's been decided. One side won. And now the chart's going to go that direction. These are also really great continuation patterns, because when you have a consolidation and it breaks out, if you look back to the origin, like let's look at this one here. So A, we go to the center, this consolidated, big consolidation, it breaks out. It's probably going twice that distance. So A to B to C is probably where it's going. B to D to C. Same thing here. C to H to F. So it's very, very predictable. And that book has a lot of really good examples of pretty big ones that are just so clear. It looks like it was designed by somebody. So, okay, let's go back into, excuse me, Fulgent here and do the thing. Okay, go into the patterns. And let's turn off the volume climaxes and turn on the consolidations. Okay, very good. And refresh that one. All right, so our last one today. And consolidations are also, like I say, very, very powerful when they occur. And again, Fulgent is marking where the thing formed with color in the chart. Not all consolidations are continuation patterns. There are failed consolidations. So this one's a continuation. We came from about here, consolidated, and went just about twice that distance. This one failed. Failures are good. They result in moves. Here's another failed one here. And then here's a breakout that just went a little ways and then turned back. Let's see if we can find some more in here. I may have to go to, okay. This is a really great short pattern, which is a broadening top. You've probably seen that quite a few times in charts where you have this lines up this way, this lines down that way. So you have your short signal. Here is a more classic consolidation example right here where we went up, went sideways, and it actually sees two different breaks here, but this is the one that counts, the one that has the gap and the volume after the consolidation. So it goes up to here, and it's going about twice that distance. Here's another broadening top formation, and so on. Okay, another one there. Here's two classics back to back. Consolidate up, broadening top, down, and that's it. All right. Okay, so that is all of those patterns. Okay, so now, and I hope all that was helpful to you in looking at charts and looking at these patterns that form just when you see them with your eyes. So we've gone over now what I can do is show you about this tool and some of the things that it can do. It's pretty cool, and I think in just a few minutes I can go through this and sort of show you the various things that it has. So we've looked at the fact that there are annotations in the chart as to where the patterns are. There's also expert commentary, which I didn't talk much about, but in the expert commentary it talks about the pattern and some of the things that I said, like when they're good, what the targets look like, where the chart's going after it breaks the pattern, and so on. So that'll come up on any pattern. If I click, after a pattern, it'll then tell me what that is. So, here I've got a consolidation over here. Of course, we're just looking at consolidations. So this is a long-term consolidation, and then it talks about it. Down here, there's also a link to a web page that has more information about that pattern. So it's pretty educational in addition to helping you find them. But the whole idea of this thing is to help you find the patterns every day. That's really what it's for. And so what I'm going to do now is to show you a couple things. We'll go ahead and turn on all the patterns, and we've got extra little buttons down here to do that. So I've got enable all, disable all. So let's go ahead and enable all of them. And you'll go to close it, and now let's refresh. Okay, get ready to be blinded here. So here's all these patterns we've been looking at all over the place in the chart. And you can see down, 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 up, up, up. They're really pretty darn good in terms of directional accuracy just by themselves. But like I say, you want to look at the pattern and you ask yourself, does the market see it right there? And a lot of them are either too early or the pattern's too small. But the point is, you get shown that they're there. I mean, that there is a gap or a trend line break or whatever it is that the program's able to see. So what you can do though is limit the patterns. Different people are going to want different things. And I'm going to show you why you want as many patterns as possible on your chart in a second when we do scans. But some people just may not want to see this many, and they may want to see the better ones. So again, we've been working on this stuff for 20 years, right? So one of the things we did along the way is we created a database of factors. So like a trend line, what is the slope of the trend line? What is the volatility around the trend line? How many touches does it have? There's about 7 or 8 things we measure on trend lines. And so we went through millions and millions of patterns in the market over 20 years. And we, with a mathematical process, we figured out which particular features are the most important for accuracy. Okay, that database is in this thing. So the way I get to it is I go in here, and it's really simple. It's right there. So right now I'm on the show all setting. Let me go to 75 strength and refresh, and you'll see immediately they just kind of go away, except for the ones that are really moving. Like, look at this, boom, boom, boom. So that's what that's for, is it isolates down to just the ones that are really significant, that it thinks are really significant. And so that's a way to limit. And of course, there's several settings in there. I could do 70. I could do, and I can go even higher, constraints and go to 80. But that's one of the tools that we have in this. There's 70. We got a couple more came in there. Nice trend line break. Saucer came in, and I kind of like that 70 rating myself. So the other thing that is here is timeframes, because patterns can form across 7 to 10 bars. They can form across 14 to 20 bars. They can form across 30 to 60 bars. So short, medium, long-term timeframes. And, it's kind of a fractal thing, really. But so in Fulgent, what I can do, if I go back into it, is I can actually activate timeframes. So let's go in here. And you saw me turning on the different patterns. Well, here's my short-term, medium-term, long-term. Let's just do a couple of them. I'm going to turn off the long terms, and I'm going to turn off the medium terms. You see those little check boxes that are all turning off. And let's turn on only the short terms, all patterns, short term. Close it and refresh. And these are pretty short term, so they're, it's looking for little movements, but they're actually really pretty good, because all these, I mean, they follow through really nicely, especially over here. So that's short term patterns formed over a few bars is the definition of that. Go back in and we'll turn on the medium terms. And I'll stop there with that. You just got to see what that looks like. So short terms, turn those off, turn on the medium terms, and say OK. By the way, some of this, if you have the chart pattern engine right now, you don't see that, because these are features that we very recently added. And Jeffrey and the team over there have the build. They're testing it. He's going to talk about what he thinks is the release date in a minute when he comes back on. But it's very exciting. We added a lot of stuff to it. For this version, it's version 2. Let me go ahead. I got the mediums on now. Let me go ahead and refresh. Now look at the chart. Okay, now refresh. Boom. And so different people are going to have different preferences as to which ones they want. And that's why we provide so much flexibility to see what you want to see. So we talked about turning on certain patterns, turning the strength rating, limiting patterns. And so now we've got the short and the medium. So we have this restore defaults down here, which puts them back to what we think you should be looking at, which is a mixture of different time periods and stuff. So that's that. Okay. Now there is a reason, like I say, why you want to have all these patterns showing on your chart, and that is for scans. So let me make sure that doesn't look like enough patterns on here. So let me just make sure I did that right. Patterns. Oh, it's because I've got the strength rating. So let me do show all. Yep. It wasn't quite the gazillion patterns I was hoping to see there. So now there we go. Yay. They're back. So the reason you want all these on here is because you're going to scan. And the scanner is probably the best thing about this, because what you want to know on any given day across a list of symbols is which ones have a trend line break, which ones have a gap, which ones have a volume climax or the appearance of a volume climax pattern. And so you can go into the exploration, and we're going to go ahead and first I've got the Fulgent chart pattern exploration chosen up here somewhere. There it is. Make sure. So Fulgent AI patterns is chosen in the Explorer. And I just love working with this software. It is so easy to use. Okay, here we go. S&P 500, right? That's a long list. Well, the good news is this stuff is written in freaky fast code. So I'm going to start that exploration. You go, and Jeff's going, no, not 500 symbols. Oh, yeah, piece of cake. Okay, Fulgent, do your thing. So it's going to be done. I can say a couple words while that's going, and then we'll look at what it comes up with. So it is going through 500 stocks. It is running every one of those patterns, every single one of them, different time frames across all those stocks, across the loaded data, determine if we have any hits on the date that was selected. And I think I have the right edge date. I forgot to look at it, but I should have left that as the right edge. You can set any date, of course, and go back in time and see what happened on a particular day with the software, with MetaStock. And you all know that. But anyway, so it's almost done. Okay, thank you, Fulgent. Let's see what you got. And it comes up, and we have new long signals, new short signals. And so let's look at a couple of those if we have it. How many we got here? Let's see. Okay, it looks like I've got quite a few there. So we can just bring up a couple of them. So new long, let's look at it here. Got a new long signal. And of course, lots of patterns in here. Let's see, let me just zoom in. Okay, that's a trend line break. And I'm looking at it, I see the trend line. It's not gone very far yet. I'm gonna wait on that one a little bit. But here's what you can do. With Fulgent AI, we have this thing called in long and in short. It will actually keep the signal around for 3 bars. So that's over here. If I look at bars, that's this column is telling me. So let's go ahead and look at the in long signals here. And here's one that's been going for 3 bars. Accenture. I'll bring that up. And let's see what we got. Yeah. So consolidation break, and it's working out. It's taking off in the right direction. So you can find patterns that are in play. I got quite a few there I can go through from the S&P 500. And the actual pattern itself is this number. There's a little scale in the manual that tells you which pattern each number is. So, and you can search for just one. We have scans for each of the individual patterns as well. So a lot of flexibility there. Or you can turn off patterns. Whatever you turn off in that dialog will not be seen anywhere, not in the Explorer, not in the charts. So you can specialize. You can say, I only like saucers, and I only like the support resistance breaks, and just turn those on, and that's all that it's going to find with that restriction. Okay, so that's whirlwind tour of the Explorer feature. But I really want to go back and show you a real-time chart because it's fun. Let's see. That's see, Jeff, I want to get back to Apple. Let me see. I think it's AAPL. Can I do it that way? Symbol. I always mess this up. I think that's it. Yeah.
You got it.
Oops, no, I didn't. I didn't say it though. I know. Okay. Here's chart. I'm getting there. Okay. Apple selected. Okay, let's go look at the 30 minutes here. 30 minutes. Because these patterns work in anything,
This is actually really good you're going back to Apple because Norm Henderson actually wanted to look at Apple for today. So
awesome.
There you go. You read his mind.
Well, that's great. Well, if you'd had the software, you would have picked up that support resistance break this morning with the scanner and off to the races. But you can see, this is really valuable. Just look at a couple of charts here in terms of pointing out where these things are happening. And then you look at the chart and you go, yeah, I think that is a good, volume climax pattern right there. You got the volume came up. We're backing off the chart. A support break right there across all those lines right there in Apple. So it's just really fun to pull this thing up and see what it's going to show you. And you'll get really great trade ideas very, very quickly. Here's the next chart in the lineup. Let's go back a little ways here. You got, saucer, another one, Fibonacci retracement straight down, all of these down, up this way. I mean, those little moves right there, hour and a half moves are pretty some options on that. Oh my goodness. Okay, not a recommendation. It was just saying, a lot of fun stuff going on here. Here's support resistance reversal, which went down very nicely. So and you could do. I mean, it doesn't really matter. It could be forex. It can be futures. These psychological patterns work in anything because any freely traded market, people are looking at this and they will react to what's happening in the chart. So Fulgent will bring those to you so you can easily trade them. Okay, so that really, I think, wraps up. I'm going to give you a little bit of time here, Jeff. I just got a couple more things to say to show to people really quickly in terms of trading tips. These are my favorite patterns. The SR breaks, saucers, volume climaxes, and consolidations. They are, if they're well formed and the market is behind them, they're really, really powerful. Low volatility is better. If you got a chart that's going all over the place like this, yes, it'll find patterns on it, but you're much better trading a chart like this one, like Travelers, that is much smoother, calmer, very clear breaks of support, way better to trade. So that's the second thing, because you have to put a stop out there and it's likely to get hit if the chart's going all over the place. Okay, so volatility. We got two more. Trade in the direction of the market. So I had marked this chart earlier, if you get signals in the direction of a market pattern, like a market saucer or a market gap, great. Right, do that, because the market, floats all boats, and you want to be in the direction of the market if you can. There's exceptions to that, but generally speaking, you really want to be, aligned that way. So the last one I have, and this is actually my favorite picture in here, because if you're using any, I don't care whose system it is, and there's some really good ones that MetaStock has partnered with people, they're great. But if you have this up and you confirm, I drew these on here, but this is a RSI 14 period going through the 30 level to the downside and back through the 30 level to the upside. That's a dynamite signal generally. But if you confirm it with a pattern, it's even better. So this one was confirmed by a volume climax. We have trend line breaks happening here. We've got a Fibonacci retracement happening there. And then a little bit later, so you had to wait for it. Here's the turn. Don't trade it yet. That's up here. Wait till you get the pattern, and then look at the pattern and say, oh yeah, that's a good gap right there. I'm going to trade that. So confirming anything you're doing with these will just give you another leg up, probably another 10 points in accuracy in what you're doing. So it's really great to have for that. Okay, so my final slide is again this book, and Jeffrey, I'm going to turn it over to you. And thanks again for having me on.
Yeah, do you have time for just a couple questions?
Of course.
Since I have you. Do you still have the Apple chart up?
I do.
Now let's go ahead and look at it. Rodney saw an orange line at the end of the chart, and he wanted to know what that was. I don't remember seeing it, but I think we just had a.
I think that's just the end of the day. Did the market, did it drop? Yeah, here's the closing price. So it's just.
That's the bar. Yeah.
It's trying to color the pattern. See how they're colored like this. So it just has one bar to do it on.
That was it was showing. Okay, cool. Let's see. Levin said something a little bit earlier, and he's actually had some suggestions. I already emailed him to you, but he says, "Hello, I'm from Turkey. I'm using the chart pattern, and it's an impressive module."
Thank you.
So he had a bunch of suggestions, so I sent them over to you because I know how much you love to get them. I do. In addition to that, one question from YouTube that I wasn't able to answer. Dennis wanted to know if it would be possible to show a head and shoulders example.
Oh, they're kind of rare. So I don't know if I could find one. I can turn it on and look. Let me get, one thing you want to do in real time is increase your strength rating. You'll get a much better pattern. So I just want to do that real quick before I move on. Because it's just finding them all over the place. So you'll get much more confirmed, like here, like that, with the strength rating turned up a little bit. So, but let me go ahead now that I've done that and turn it back off, and
Jeff,
we're going to turn on. I think I can. You can go ahead and get another question queued up. I'll do this real quick. I can do it.
Hey guys.
The other thing I was going to. Yes, Mr. Lewis.
The video has paused. We're getting audio, but I can't see the chart. So I don't, if you just want to wait a second. It's happened a few times during this presentation, but only very briefly. Is there something you can do on your end, Jeff, that's magic?
Here, let's try this. I'm going to just change the presenter to me, and then I'm going to change it back to Ed. And then I'm going to ask
seems to be
Ed
doing
say
something.
Yes. All right, Ed, can you go ahead and share your screen again? Sometimes that's enough to refresh it. I will let you know I was seeing that come through. Are you seeing it now, Greg?
Yes.
Okay.
Thank you.
Well, there you go. Magic.
Sorry about that. You had a great rhythm going. I hated to mess it up.
Yeah. Ed, are you still with us?
I am. Can you hear me?
Okay. Yeah. We can.
Okay. Can you see the screen here, the chart?
Yes. Everybody's seeing it now.
Yeah. So I looked for a few charts. I'm not seeing any right offhand. I know they do show up, but like I said, they're kind of rare.
Dennis, we'll find one for you. We're just like.
Yeah. Oh wait. Let me
get in
turn
touch with us at metastock.com/sales chat. We'll find some for you. We'll do some scanning and find one for you.
Well, I turn on the time frame, so that may help. Let me just try that. Here's one. So on the right here, it's seeing, head and shoulder down from shoulder, head, shoulder. Not a very pretty pattern. Here's another one over here. Let's see. Let me go back. You may see another one show up. Oh, there you go. That's a nice one. So
It's a
shoulder,
beautiful one.
head, shoulder, boom.
Okay, very good. Also, for anybody, if we missed any of your questions, or if you want to look at some charts, maybe you want us to send you a couple charts with the engine applied, just send us an email or get in touch with us at metastock.com/saleschat. We're happy to do that kind of stuff for you and let you look at them. I think that's about the end of the questions, Ed. I have a few things that I wanted to talk about. Actually, there was a question I promised that I'd answer. Somebody was asking if we had planned on doing any classes around this. So I was like, how did he know? So let me kind of get right to this. We are actually going to do a special customers only class to kind of to bury the lead. And I'm going to tell you about that in just a second. I do want to talk a little bit about this product, though, and really Ed in general. I know I've kind of talked about kind of how good of a job Ed does, and he does. I love the fact that the expert advisor has the commentary, it has the descriptions, it has the scans. He did such a really, really good job. As Ed alluded to, we are actually right now, I've been getting messages from Stephanie where we're testing a brand new install for the chart pattern engine that we hope to have available maybe tomorrow and probably tomorrow, but we're going to give ourselves until early next week just in case something happens tomorrow. So what I would probably recommend that you do is if you order it, just wait until we actually have the new version up tomorrow to do your download. But that being said, in terms of the actual program itself, it's going to identify the consolidations, cups and handles, fib retracements, gaps, your head and shoulders, the saucers, breakouts, reversals, tops, bottoms. When I asked Ed to put together a really good chart pattern engine, I had no idea he'd do such a good job with it, and he really has. It's been very, very impressive. So all in all, you're going to get about the live session. We're going to go ahead and have that live session Wednesday, August 12th. So next week, we're going to sit down and Ed's going to do a little bit of he's probably going to talk for about 20 or 30 minutes. I'm going to do a little bit of here's how you run scans in MetaStock. Here's how you do the expert advisor, a boot camp for this. And Ed's going to talk more about the trading aspects and the different patterns. Do you want to talk a little bit about what you're going to talk about?
Oh, you nailed it. I mean, so you're going to go over using MetaStock, which you're a perfect expert at. And actually, it's so easy to use. You probably need to do that. But there's probably some people new to the program that would really appreciate it. So I'm glad you're going to do it.
Yeah. But we've been onboarding a lot of customers just because they want to try this thing out. So it's been
good.
Yeah, it's really good.
No, I'll be just looking at, like I said, trading with it. And we talked about a lot of the factors, but I would show people, if I were actually engaging the market with this, what I would do. I mean, how I would use it, and some examples of that. So yeah, I think it'll be useful.
And it's a free session. It is a customers only session. And the reason that we do it that way is we're not going to be trying to sell you anything. We just want to kind of go in and make it as educational as possible and answer questions and all that kind of stuff. So that's free to anybody that owns CPE. If you've already bought it, I'm going to basically email you a link to log into it next week. If you haven't bought it already and you buy it by the time we do this class next Wednesday, I'll give you the free link as well. So I'm going to send out a link that's going to be 4 p.m. Eastern next Wednesday, August 12th. All right. So normally, Anthony, thank you for the question on how much it is. Normally, the cost of the software is $1,495 for the chart pattern engine system as an add-on to MetaStock. Here today, we're going to do $500 discount. We're going to offer it to you at $995. That's going to include the free live bootcamp training that we just talked about. And we also offer that with a 30-day money-back guarantee. So we haven't gotten a lot of returns on it. We do allow you to try it out. We do want it to work well for you. We'd encourage you to try it. And we want to take that risk-reward ratio and make it just for reward ratio. So that way you can give it a shot. If it works for you, you're going to keep it. You'll have no problem paying for it. So give us a call to order, 800-882-3040. You can order online if you prefer at metastock.com/FulgentCPA.
CPE, sorry, Fulgent CPE chart pattern engine. And you can also, if you have any questions at all, or if you want to kind of talk to us about kind of the package, get in touch with us at metastock.com/saleschat. So in any case, that's kind of what we had here. Give it a go. It's great. It's great. Thank you for all the work you did on this, Ed. I think it's probably the best add-on we've released in a while. So good job.
Thank you. It's been fun.
All right. I want to say thank you for coming, Ed. You did a good job. I want to thank everybody that showed up today, came to the class. I hope you enjoyed it. If you have any comments, if you have any questions, let us know. And we'll see you at the next one.
Absolutely.